All right, another day, and this time the portfolio has decided to churn around. We're up again. About it's been hovering around 100 to about $50. So it's actually been a stark turnaround, despite the fact that the market has been quite stagnant and going down for a majority of the day. So as you can see here, my S&P futures position has gone down due to about $16 drop in the S&P today. However, with the drop in S&P, you can see that volatility has remained higher than usual. The VIX currently at about $19 still. And the good thing is that it's actually dropped slightly. So it's still kind of high compared to 3 days ago, but now it's dropped about almost $1, 75 cents, 77 cents. So because of that, now we can see the premium to buy back all of my options that I've sold has gone cheaper. So that's why the prices have increased significantly. So you can see DraftKings all the way down has been seeing remarkable gains, covering back my year-to-date loss, about $100 from yesterday. So on top of that, American Airlines has decided to jump up another 70 cents. So now it's at $19.30, which has caused about a $50 or $60 increase. It's been hovering around that range for today. So one thing that I do notice is that if the volatility stays around 19, we should expect this to continue to stay, slightly at a $70 loss. But if the price keeps going up due to my hypothesis, which it probably isn't going to happen, but if it does, the price will keep increasing because of increased flights after this initial Omicron variant subsides and we enter into the summer. More people are going to come around and start flying again. So that's my thought process. So right now it's hovering around 19.29. Earnings are actually in 10 days. So that could also be another reason for the increase in the premium for American Airlines. Typically about 2 weeks as you go into earnings or before earnings, the volatility for that specific stock increases. So then there's higher anticipation. That means that it costs more to purchase them, which since I purchased them before the earnings, the volatility was still kind of low. Now it's increased. You can see it's about 49%. We also see here that there's actually this is kind of low because you can see on the other in other sections for the implied volatility that it's actually gone. It's actually higher than what's in the current 224-day period. So there might even be a price difference that may be favorable in the future as this implied volatility catches up with the other ones. So this one's gone up, which is really nice. Even without this $60 profit approximately, we'd still be up about $30 in the day, which is much better than a lot of other stock positions. If you were just holding regular stock, you probably would have been losing money today. So I consider this a win with respect to today's portfolio. And then as we see, DraftKings has gone up. Ford still hovering around 24.44, which, as I keep saying over and over again, sounds like a broken record. But I think that this will go back down. I don't think there's any real tangible increases in the price that are warranted apart from that news. And then we'll have to see in about 30 days whether the future forecast for new car sales is still high for Ford. And so I'll hold on to this for now, and we'll see if we need to make any further adjustments. And then on top of that, you just see other small gains. So I don't like to talk about these too much because it's just been the same story. It's just been higher theta decay just day after day. The prices haven't moved too much. They've been hovering around. So overall, those positions have been steadily growing. Wish is another one that I wanted to keep an eye on. It has been in the money, and with the market closed, we can see that the P&L finally concluded about 114 for today. But anyways, back to Wish. So with Wish, it's actually been in the money for a few days now, but considering we have about 40 days left, and it is past the 1 standard deviation when I first entered into the trade, we should hopefully see it go back into the price range that keeps this position out of the money. But if it stays in this position, or if it stays low, I've seen it's been dropping quite significantly. If you look at the chart, it has been just a steady drop from $30 down all the way to about $3. So if it does continue to drop, I probably won't continue this position. But it was more of a test. I kept that 1 standard deviation out, and it seemed like it's been breaking that price range for my put. So I may just close it after this. But it was a little try, and sometimes you win, sometimes you lose. But it's been staying around for quite a while at this price range, so maybe if it does stay around this range, we'll maybe have a slight loss, and we'll just close it out, call it a loss, which is expected in this type of trading strategy. You don't. I think according to the probabilities, you're expected to lose some, but hopefully you win more that covers your losses. So another thing that I've done is I've actually closed out this position for Teva. It reached the 50% range, 50% profitability range, which is the ideal target for TastyTrade, saying that the first 50% is the easiest to acquire. So once you obtained it, you either roll it further or you just close it out for a win. In this case, I closed it out for a win because I don't know. Pharmaceutical companies are pretty notorious for, if one bad earnings report, it's going to crash. And so I just took the profits and ran with it. And now I have some money in the bank that's realized. And so we'll just keep looking around. I'm not going to enter into any future positions currently, since due to the higher volatility and the increased loss positions that I have, my buying power has actually dropped down by about $1,000 since there's naked positions. The maintenance and required capital increases as you increase your losses, and volatility increases. So I will just keep my positions as is, and maybe when the volatility goes back down, or if these positions start becoming profitable and I close them down, then I'll just go ahead and enter into more positions. But since we're at a VIX of approximately I think 19, and 18 is kind of dropping, we want to keep our available buying power quite low, or you want to keep our available buying power quite high, because I think around 30%, since there is a higher, since you need more capital in order to keep positions open once volatility increases. So when volatility is low, you don't receive as much premium as you do when it's high. Therefore, you want to keep it open. You want to keep their buying power high, so that way you can have, if volatility increases, you could sell more positions. And then also, you have a decrease in buying power when volatility increases, because now you're probably in loss positions for a lot of your options. So that's why they say keep it pretty low whenever volatility. Keep your buying power high whenever volatility is low. And that's currently where I'm at. I think with the current losses, my buying power is currently about, I think, 40% utilization. So I need to keep my positions the way they are until I get more profitability. Anyways, that was a really long-winded speech, but those are my positions for today. I think the main thing, as a recap, I sold Teva to collect my first profit for the year. Yay! And then from there, I also just kept watching forward. We'll keep watching forward, keep seeing if the stock market, if the S&P is going to recover, or if they're going to listen to Powell and finally start crashing down. And we'll also see American Airlines, if there's any future developments with regards to their earnings in the next 12 days. So with that in mind, I'll leave it there. And we just keep seeing, hopefully, a profit in the next day. That's all for today. So I'll go ahead and just log out. Thanks again for your time, and I'll talk to you guys soon.